Thank you for standing by. The webinar will start momentarily. In the meantime, please take a moment to join our Q&A box on slido.com. To raise questions, open a browser either on your mobile device, desktop, or laptop, and point to slido.com. Type the code and click the blue arrow to join the Q&A box. Alternatively, you can scan the QR code flashed on screen now to get directed to our Q&A box on slido.com. Thank you, and please continue to stand by. Good morning and welcome to the 2022 Year-End Tax Activities Webinar hosted by Titanium Technologies. At this time, all participants are on listen-only mode. For your attendance to be recorded, please update your name tag to show your first and last name followed by your company name. Questions will be taken at the end of certain topics within today's webinar. To raise questions and participate in the activities, open a browser, either on your mobile device, desktop, or laptop, and point to slido.com. Type the code 9314146 and click the blue arrow to join the Q&A box. This call is being recorded. If you have any objections, you may disconnect at this point. We are here today to provide a refresher on the key steps to fulfill a successful year-end tax activity using the myHR system. My name is Jabel, and I'm your webinar moderator. I'm thrilled to introduce our speakers for today's session. We have Sir J.M. Belza of Solution Design and Ms. Mary Adlawan of Payroll Operations to impart their knowledge and to provide us with an overview of how we are to utilize myHR for the year-end tax activities. I'd also like to acknowledge the presence of our senior management team, along with our founder and CEO, Jerry Tiang, and with us today as my co-moderators, Ms. Nice Magarang and Ms. Vivian Tiang. Showcasing our agenda this morning, we have the following topics in store for you. We have topic 1, how to conduct tax reconciliation, followed by encoding previous employer information and changing the earning classification from MWE to non-MWE. Topic 4 contains all about the BIR Form 2316 and the Alpha List, along with the generated reports from myHR. Topic 5 talks about PHIC 1% differential. At the end of this webinar, everyone, our dear participants, should be able to, 1, list key components to properly conduct your tax reconciliation and other year-end tax activities. 2, to compile all relevant documents and reports pertaining to the key components. And 3rd, to evaluate your readiness in independently doing your year-end tax activities with the myHR system. So for starters, let me invite everyone. I can see on our participant list that we have 27 on the line. On today's webinar, we have 27 participants. May I invite everyone to join our slido.com for our icebreaker before we begin discussing our topics today. You can simply open a browser, either on your mobile device, desktop, or laptop, and point to slido.com. Type in the code 9314146 and click the blue arrow to join our icebreaker this morning. So let's see if our participants are ready. You can get your phones out or your tablet, your laptop, your computer, desktop, and open a browser, point it to slido.com, key in the code 9314146 so you can participate in our icebreaker this morning. So let's see. I'm also going to check. Let's see, 9314146 for the code. Let's see. So let's see if we have folks that have already joined the Slido box. This is also going to be used during our Q&A session. When we open up the floor for questions, you can type in your questions into slido.com to raise your questions. So let's see. Let's join this slido.com. You can open a browser. Again, you can open a browser on either your mobile device, desktop, or laptop. Point to slido.com, type in the code 9314146, and then click on the blue arrow to join this icebreaker. We'd like to know, for our first activity, we'd like to know your user roles in your year-end tax activities. What role do you have, or are you playing in the year-end tax activities? So we'd like to know, we'd like to collect that information. Of the 32 participants that we have on today's webinar in the session, what's your role in the year-end tax activities? Let's see. Oh, okay. So we're getting flashed on our screen. We have responses. We have payroll processor. That's a big one. So we're meaning there are most of our participants, I presume, are payroll processors. That's why, the word payroll processor is flashing big on our screens right now. We have payroll uploader, patron and auditor, pan encoder, processor. Wow. Okay. Well, that gives our speakers, Sir JM and Miss Mary, that gives our speakers an idea of our audience this morning. Payroll processors. Anyone else is going to add to the active poll that we have now? What's your user role in the year-end tax activities? To join this icebreaker activity, open a browser and point your browser to slido.com, key in the code 9314146 and click on the blue arrow to join this icebreaker activity. So we have, it's really a big word, right now, payroll processor. Now, let me ask everyone. So just stay on that same page on slido.com. Stay on that. Stay on that, because my second question for you this morning is, how do you rate your readiness in independently doing your year-end tax activities? So you can rate yourself, I'm not ready at all, or I'm prepared and ready. So let's see. Oh, okay. So we're getting, wow. We have one response, and the response says, it's quite on the low end of our readiness. Wow. Let's submit our answers. This is self-rating. Be honest. I let's have honesty is the best policy. How do you rate your readiness in independently doing your year-end tax activities? Let's rate ourselves on that. Wow, 60% on the left side of our poll. Wow, on the left range. And then we have 40%. Maybe I'm ready, maybe I'm not. And it's a good thing that you're attending this webinar. I We actually designed this webinar so that you get to be equipped with the key concepts or key components on how to do your year-end tax activities, and of course with the use of myHR. So we have 58% and then 42%. Wow. Okay, so let's see if this rating is going to change toward the end of our webinar today. So the general population, we have a score of 2.4. So we're 2.4 ready. That's our rating for this morning. Our starting rate, we have 2.4. So let's see. Let's see if that's going to improve later on by the end of this webinar. So for first topic, our first topic is how to conduct tax reconciliation in compensation and benefits. And we have our wonderful speaker, Miss Mary Adlawan, to deliver her knowledge, to share and impart her knowledge on how to conduct tax reconciliation in compensation. Miss Mary Adlawan, the floor is yours.
Thank you, Ms. Jubil. Good morning, everyone. So my topic for today is how to conduct tax reconciliation and compensation and benefits. Okay. So the activity components were income subjected to tax, income that are part of the 90K tax ceiling, the de minimis income, the fringe benefits income, the reported tax exempted income, the non-reported tax exempted income, and the monthly remittance report or 1601C, BAR 1601C4 for the compensation. Then employee tax type, MWE and non-MWE. MWE means minimum wage earner and non-minimum wage earner. Gross income. If you say gross compensation income, what are they? So gross compensation income means it is the all payments received by the employees from their employer for their services rendered. It includes salaries and wages, honorarium, commissions, and other allowances. Fringe benefits, bonuses, and some of them is taxable pension for the senior citizens, etc. For the de minimis benefits or incomes, they are not subject to tax in a certain amount that have ceiling for you. Number one, the monetized unused vacation leave, not exceeding to 10 days during the year or per calendar year. Then the medical cost allowance to dependents of employees not exceeding to 250 per month. The rice subsidy, 2,000 per month. Allowance not exceeding to 6,000 per annum. It is a medical allowance, uniform allowance. Then the actual medical assistance not exceeding to 10,000. The laundry allowance, which is 300 per month. The employees achievements awards not exceeding to 10,000. Next slide. The gift given during Christmas and major anniversary not exceeding to 5,000. The daily meal allowance for overtime not exceeding to 25% per minimum wage earner per region. Then the benefits received by an employee by virtue of the collective bargaining not exceeding to 10,000 per annum. Taxable income reported income. It includes basic salary, overtime pay, holiday premium, night shift differential pay, other allowances not mentioned in the de minimis income, and other bonuses exceeding to the 90K tax ceiling. Any amount of the de minimis income could be a part of the 90K ceiling. Tax exempted income, they are all income aside from the defined de minimis income, all allowances na hindi that are not mentioned in the de minimis income. For the system, they were the allowances under series PT Inc. 4 or BN Inc. 4. Then for the minimum wage earner, all income of the minimum wage earner such as basic pay, holiday pay, night differential, and hazard pay, they are exempted tax. For the tax deductibles, they are the SSS contribution, employee share, the PhilHealth contribution, Pag-ibig contribution, maximum of 100 per month, then the union membership pay. So they are the benefits income received by the rank and file that are under tax deductible. So for year 2018 up to this year, 2020, our tax table refer to the following. For the 250 income and below, they are exempt from tax. Above 250 to 400,000, in excess of the 250,000 income is subject to tax for a 20%. For the above 400,000 to 800,000, for the first 800,000, for the first 400,000, they have fixed tax due 30,000. In excess for that is 25%. For the above 800 to 2 million, the fixed rate for the first 800,000 is 130,000. In excess of the 800,000, multiplied to 30%. For the above 2 million to 8 million, we have fixed tax due for 490,000. And excess of the first 2 million is subject to 32% as tax rate. For the above 8 million, we have a fixed tax for the first 8 million, 2.41 million. Then all the rest is subject to 35% as tax rate. So all annual computation of tax due will refer on this table for the year 2022. So for sample computation on how we arrive or how we compute the tax due. Next slide, please. Okay. So for example, we have a gross income of 450,000 less non-taxable exempt compensation income from present employer like SSS, PhilHealth, Pag-ibig, and on yun, a total of 20,800. 13th month pay and other bonuses, example is 75,000 only. So the de minimis allowance, example is 12,000. Then total non-taxable income is 107,800. The remaining is the taxable income for present employer. So for example, she has an income from previous employer, which is 150,000. So the gross taxable income is the sum of the taxable income from present and previous employer, a total of 492,200. So under sa tax annualization table natin, bilong siya sa 400 bracket. So less 400,000 and excess of that na 92,000 multiplied by 25% as tax rate. Then add the fixed tax due for the first 400,000, which is 30,000. So the tax due of an employee for this income is 53,000. So if she has a tax withheld from January to November, total of 43,000. So the remaining 10,000 will be the tax due or tax payable for the month of December. Okay. So by this example, so for the reconciliation of the alpha list and 1601C, so make sure that the gross income on the alpha list should equal to the gross income reported in the 1601C. The same as the tax withheld from present employer and the tax paid, still the same, equal to the form 1601C. The de minimis income on the alpha list and the de minimis income on the 1601C for the whole year should equal. Then the tax deductible and other non-taxable income on the alpha list and tax deductible on the BIR form 1601C are equal at the end of the year. That's all for this morning, Ms. Jubel.
Thank you, Ms. Mary. Let me now open the floor for questions. Again, to raise questions, you may open a browser either on your mobile device, desktop, or laptop and point to slido.com. Type the code 9314146 and click the blue arrow to join the Q&A box. Alternatively, you can scan the QR code flash on your screens now to get directed to our Q&A box on slido.com. So if you have any questions for our speakers, Ms. Mary or Sir JM, on tax reconciliation, you may raise them on our Q&A box on slido.com. We'll wait for a few moments to allow our participants time so that they can raise their questions. If you have any questions about the first topic that has been shared with us by Ms. Mary, you may raise them on slido.com. Just key in, don't forget to key in your code 9314146, and then you can type in your question. You can also set your name as the person who asked the question, or you can remain anonymous when asking your question. Type in your question and press on send, So it's going to be flashed on our screen right here. We'll give our participants another minute. So to raise questions, you may open a browser either on your mobile device, desktop, or laptop. Point to slido.com, key in the code 9314146, and click the blue arrow to join the Q&A box. Alternatively, you can scan the QR code flashed on the screen now to get directed to our Q&A box on slido.com. We're getting questions now, Ms. Mary, Sir JM. We have for our first question, just highlight the first question here. Are tax refunds taxable? That's our first question for today.
Tax refund, it's not taxable because it is already from the income. Tax withheld from your income. So tax refund is not taxable.
Thank you, Ms. Mary, for the answer. I hope our participant was able to get that clearly, that tax refunds are not taxable. Let me check this question. And for our next question on queue, we have where to encode the taxable compensation income from previous employer. That's our next question. Where to encode the taxable compensation income from previous employer?
This topic will be discussed by JM later on.
Yes, thank you, Ms. Mary. Definitely, this is going to be discussed in our second topic for this morning. Okay, let me check that. Let me close that question out. Do we have any other questions from our participants? If you do, submit them, send them to slido.com, key in your code 9314146, type in the question, press on send, and it's going to be flashed on screen. Let me give it another minute before we go to the next topic. Thank you for the question. I can see another question on queue. Is transportation allowance taxable? We have the question. Is transportation allowance taxable? Ms. Mary?
Yes. In BIR perspective, transportation allowance is taxable, but there are some clients declared as non-taxable for some other transportation allowance.
Thank you, Ms. Mary, for that question. I hope we were able to capture Ms. Mary's answer on this question. So now let me close this Q&A session so that we can proceed to the next topic, which is how to encode previous employer information. And we also have this another topic, topic 3, which is changing the earning classification. And these two topics will be discussed by Sir J.M. Balza. Sir J.M., you may proceed.
Good morning to the participant for this for the webinar. For this particular segment of the webinar, so for the objective of this segment, of course, is to increase the familiarity on how to properly encode the previous employer information use under PAN module. So this is to answer the previous question on where to encode the earnings of the employee in myHR. Of course, in encoding or in using previous employer record, we have to understand that there is the correct timing when to encode the said data for it has an impact in payroll process or in the salary of the employee. So in addition to that, so to relate key concepts to the user actually encode the data and derive the system output. So for this particular encoding of previous employer information, of course, this is executed in the event that we have a new hire within the year. This is to consolidate their previous income of the employee within the year from the previous employer to the current employer. Once the new hire submit their 2T16 from the previous employer to the current employer. For this particular, this is the sample 2316. Once the employee submit this one to the HR, so the person or the user that have access on previous employer record, they can now execute in encoding the details for the employee. Yeah. To begin with, once the user successful login in the system, they have to go to the left, this one on the dashboard. We can see the module on the left side of the screen. We have to click PAN or the person action notice. Under PAN, we have to go to employee information. So once we click the employee information, a new window will be prompted on the screen. This one, choose on the search box for us to search for the option inside the employee information to update the record of the employee. So under this one, please choose set previous employer information 2.0. This particular module is updated in line with the BIR new rulings to include the other incomes of the employees. Once we the system the screen loaded the information, so we have this one, the radio buttons. We have to click this one. We have to choose whether we are creating for current employee, for separated or the separated employee. The blue dot on the radio button indicates the employees that will be loaded on the employee box, employee name, on the next field for encoding. So next, we proceed with the employee name. With this one, so once on the submitted document of the employee, please refer to box number 4. For the previous employer record, please refer to box 13. This particular field can accommodate 100 alphanumeric characters. For the next field, we have the previous employer employment status. So please choose from the drop-down list for this particular. So we have this one, the default values. For the next field, we have the previous employer separation reason. Please indicate the values. Choose from the option from the drop-down list. With this one, the drop-down list depends on the activated values of the account or the database. For the previous employer TIN number, it can accommodate a maximum of 60 numeric characters. Please refer to the submitted BR2316 box number 12. For the previous employer tax type, so this one refers to the tax type of the employee from the previous employer. So with this one, so choose this is based on the submitted 2316 of the employee. There is an indicator saying if the employee is an MWE or not. This is sample. On the submitted BR 2316, we have this one, the portion on number 11, minimum wage earner. If that is on, if the box is checked, it defines that the employee is minimum wage rather from the previous employer. So this one, if this is marked as checked, so it implies that the employee is minimum wage from the previous employer. For this particular, so
Can you send me the Zoom link?
for the previous employer period of employment start date, so this implies the duration of the tenure of the employee from the previous employer. You may please refer to box number 2 from on the upper portion of the submitted BR 2316. For the end date, please refer as well to box number 2 on the portion of 2 on the again this found on the upper right portion of the submitted 2316. For the next field, we have the previous tax year. It can accommodate a maximum of 4 numeric characters only. So please refer to box 1 on 2316. For the next portion of the screen, for the taxable, previous employer taxable basic salary, net of statutories. It can accommodate a maximum of 16 numeric characters. Please refer to box number 37. For the previous employer taxable 13th month, again, it can accommodate a maximum of 16 numeric characters rather. Please refer to box number 46. On the previous employer taxable salaries, this is the sum of the fields on the 2316 from box number 38, 39, 40, 41, 42A, 42B, 43, 44, 45, 47, 48, 49A, and 49B. This is found on the lower right portion of the submitted 2316. So for the previous year-to-date tax withheld, again, it can accommodate a maximum of 60 numeric characters. Please refer to box number 25A. So moving on to the next, on the lower part of the screen of set previous employer information. So once we're done with the taxable part, so we're now going to encode the non-taxable. So for the previous employer non-taxable basic SMW, so for this particular, please refer to box number 27, non-MWE with income below 250,000. In the event that an employee is a regular tax or taxable from the previous employer but did not meet the threshold of 250,000, it is still included as non-taxable. Please encode the data in this particular field of non-taxable. So for the next field, we have the previous employer non-taxable basic SMW for MWE. It can accommodate a maximum of 60 numeric characters. Please proceed. Please refer to box 27, exclusively for MWE employees. For the previous employer non-taxable holiday pay MWE, please refer to box number 28. For the next field, we have the previous employer non-taxable overtime pay for MWE. Again, it can accommodate a maximum of 60 numeric characters. Please refer to box 29. For the next field, we have the previous employer non-taxable night shift differential MWE. Please refer to box 30. For the previous employer non-taxable hazard pay for minimum wage earner, please refer to box 31. For the previous employer non-taxable 13th month, please refer to box number 32. Most of the box here can accommodate a maximum of 60 numeric characters. For the previous employer non-taxable de minimis, can encode a maximum of 16 numeric characters. Please refer to box 33. Moving on the next field, we have the previous employer non-taxable salaries. Please refer to box number 35. For the previous employer non-taxable SSS, PhilHealth, HDMF, Union Dues, please refer to box number 34. For this particular field, we have the previous employer YTD income. This is for viewing purposes only. This will reflect the total income that we encoded on the certain fields inside the module set previous employer information. Yeah. Same with the previous employer YTD bonus. It is for viewing purposes only. Editing is not required. For the effectivity start date, as we recommend, please use the attendance start date or the start of the PAN cutoff of the active pay date. For this one, prior saving the transaction, as we always remind, please validate all the information in the module prior saving the button. This is to save time in doing rework if ever there are overlooked data once we encode or the data encoded in previous employer information. So since this is under PAN, so this will follow the PAN cutoff of the applicable data. So of course, again, this is PAN, so this is subject for approval of the PAN approver. Okay, moving on to the next segment of the screen, we have on how to change the earning classification from MWE to non-MWE. This is executed in the event that we have MWE, for example, the MWE in Metro Manila is 570. So in the event that the employee new daily rate is increased even 1 peso, for example, 571, they are no longer considered as MWE. So for us to correct, for us to align the tax type of the employee, it should be updated to regular tax. This is to align with the BIR, wherein the should be schedule of alpha list should be tagged, as well to the employee. Inside myHR, again, we will proceed to PAN, personal action notice, then we click employee information. So inside employee information, we have to choose set government information. Once selected, the details will be loaded on the screen for this one. So this one, we have again the search box button. So this one, for the radio button, please select the employee for update of earning classification. So the blue dot again indicates the selected group of employees that will be loaded on the employee name search box field. For this one, so please specify the name of the employee on the employee name field. So for this one, once we select an employee, the existing record of the employee will be loaded on the lower part of the screen. Example, this one, so we indicate this particular employee. So the government ID numbers like for Pag-ibig, Tax, SSS, PhilHealth, the bracket for those particular agencies, the tax status, the frequency of deduction will be loaded on the screen. So for this particular we have to include on the earning classification from MWE to non-tax, to non-MWE rather. So we have to specify the correct tax status of the employee. So for this one, please select the updated tax status of the employee. It is recommended to choose either of the below list for option. So we highly recommend to use S or single for our S1, S2, S3, S4, ME, ME1, ME2, ME3, ME4. Tax status Z has a different computation that can affect the annualization process or the year-end process on the year-end process. So it can result in the asterisk when we generate the alpha list. So we highly recommend to use the other options as stated on the screen. So moving on the lower part of the screen, so we have the other fields like the minimum employee share for Pag-ibig, maximum employee share, and then the maximum employer share, and then the maximum ER share. Yeah. So with this one, so again, once the employee specified, the existing details of the employee will be loaded again on the screen. For example, for this particular employee, the current tax type is MWE or minimum wage earner. We have to specify or update this one to the following options. So we have these options. No? Please use regular tax. Regular tax. And then, yeah, that particular option, regular tax. And then for the effective start date, as we always said, please use the attendance start date or the PAN start date of the active pay date. So for this particular, so again, this is still under PAN. So this will follow the PAN cutoff. So it will follow the applicable pay date where the updated value will take effect. So this one again, as we always said, for the encoders particularly, please validate all the details as seen on the screen prior saving or prior hitting the save button. This will save us time wherein most of the approvers, they do just approve without reviewing our data. So it is a responsibility of our encoders to really validate all the details to prevent us from re-encoding or re-updating the data that might affect the payroll of the employee. Yeah. So for this particular segment, so we have to share the important reminders wherein if ever our account setup of tax computation is annualized, so the encoded data, of course, will based on the approval, it will take effect on the start pay date. But for the annualized, we have to specify or highlight that if the tax computation is annualized, the encoded data from the previous information of the employee, previous employee information will already take effect on the next regular payroll of the employee. So the earnings or the details that we indicate on the previous employer record will add up or will affect on the next particular pay will affect on for example, the previous employer record that we have encoded plus the current income of the employee So there will be a recomputation of the tax of the employee that will affect on that as stated on the next regular payroll processing. If again, to highlight, this is in the event that the tax computation is annualized. So we have other setup of tax computation, what we call the as per pay. Of course, in the event that the encoded data is approved, it will take effect on the, we can see that one on the report, on the employee profile. But please be reminded that it will take effect on the last regular payroll processing, or in the event that the employee resigned in the system that the previous employer record is encoded. So to note, the last regular processing of the year is for the as per pay frequency. The last regular payroll processing of the year is automatically will be annualized computation for this chosen tax computation method. So it doesn't mean that the pan encoder encode the previous employer record in expecting that there will be a recomputation of tax on the next applicable regular payroll if the said tax computation is as per pay. You have to wait for the last regular payroll of the year. For the last reminder, we have other tax computation, which is what we call month to date. Again, once the encoded information, the module will be applied based on the approval of our PAN approvers. But same behavior with our as per pay taxation method. The encoded amounts will take effect on the last regular payroll processing of the year. So again, same with the as per pay. The last regular payroll processing of the year is automatically will be annualized for this chosen taxation method. So the difference between the month to date and the as per pay is that the as per pay focuses on the current income of the employee. That's the system computes for the tax for that particular pay date only. For the month to date, it applies the month to date computation wherein it follows the BIR semi-monthly table wherein it recomputes or it adjusts the computation of tax from the first pay for the particular month only. So if ever the next month comes, so the previous income of the employee, the previous tax will not affect on the current tax or the current income of the employee. Yeah. And we have additional reminder. So in the event that the encoder encodes the data and it is already approved by our approver, please note that there's no deletion on the encoded and approved transactions. That's why we always advise that prior hitting the save button, everything is reviewed because there's no deletion in the system once the data is approved by our approvers. Yeah. For the next item, so of course, one of the reminders is that the latest encoded and approved transactions prevail. In the event that the first transaction encoded by the encoder and approved by the approver, there is a overlooked data on the first encoded transaction by the user. And then if ever the user update the data for the said employee, so the system will refer to the latest encoded and approved data. So the previous data will no longer be the reference of computation in tax computation for the affected employees.
Thank you, JM, for presenting those two topics. Now let me open the floor for our second Q&A session. We do have several questions on the queue. Let me scroll and let me highlight the question that will be answering for this session. So the first question here is, can you make this webinar available in your library to be accessed anytime? If not, where can we view this when needed? To Miss Abby Madura, thank you for that wonderful question. You will be receiving, all of our participants in our webinar sessions will be receiving a post-webinar kit. It contains all the recording links, list of questions, learning materials, our supplementary materials, and support articles, everything that you need, and everything that we have prepared so that we can help you be ready with your year-end tax activity. So everything will be shared with you. It's going to be sent via email. So for those folks who have registered and have provided us with your email addresses, please expect an email containing that post-webinar kit. So I hope everyone was able to register, and you'll be receiving that email digest after the webinar. And also, if in case one or several of your team members missed this webinar, fret not, because the post-webinar kit will also be uploaded a week after our webinars are done. It will be uploaded to our knowledge base on the customer portal. So if you have your active customer profile on our help desk portal, so that's where you can view our learning materials, our webinar materials. So thank you for that question. Our next question on queue is the new income tax table for 2023 automatically uploaded to the system by Titanium? So that's the next question. Let me highlight that. Is the new income tax table for 2023 automatically uploaded to the system by Titanium?
Regarding the question, to answer it's yes, because it's mandated by BIR.
Yes. But we practice.
Thank you, Sir JM, for answering that question. Yes, definitely it's going to be updated, the new income tax table for 2023. Next question on queue. What if the new hired employee will not declare his or her previous income, or did not declare his or her previous income? So what's going to happen?
So from his current employer will be the one who reflected in the 2316. So there will be no income reflected in previous income. So it's up to the employee to file an income tax.
Thank you, Ms. Mary, for answering the
Felipe.
question.
Is it on?
Yes. Hi, Jerry.
Okay. Hi, sorry, I'm intervening with this question. The best practice, and this is a feature that we have in the system, the best practice is to set a deadline for the submission of previous employer income. We normally set the deadline for October. These are for employees that are hired between January and October. We set a deadline in the system so that we do, is it called substituted filing? No? So then if they say no, then assume that they have other income elsewhere and they do it themselves. The company would not do the filing for them. So that's a standard EIR form. So then, so kind of you're getting a waiver from your employees. No? And then for employees hired naman from October to December, of course, that cannot be avoided. Then it's up to recruitment to do due diligence, no, upon acceptance of job offer and upon onboarding, you must strictly require that they submit their 2316. And if they can't, and if they don't, better that you do not accept them, perhaps, but maybe that's too strict. But I think that there should be no room for the new employee to declare or not declare. I mean, as a company, as an employer, we should not put ourselves in that position. They should declare, no? And you can send a request to our help desk to activate our feature for the substituted filing survey, which would require all your employees to respond via the myHR dashboard that they are availing or not availing. No? So you must get that waiver. No? And then for any employees who did not answer, I assume that, well, you have to agree whether you assume that they do or they don't, no? for the new hires anyway. No? Yeah, so that's a standard fee. So kumbaga, there should be no what if the new employee will not declare. There should be no that option. They have to declare. No? And then there has to be a way na lang to enforce it so that they are forced to declare. And if they don't declare, then the company must be legally protected because we're required by BIR to do the deduction. Yeah. Okay. So in short, bawal pasaway. Thank you.
Thank you so much, Jerry, for the additional answer to this question. So I hope everyone gets clarity on this question. And then the next question on queue is, how about the employee from province with Manila rate? Is she or he considered as non-MWE? So the employee from the province has or follows the Manila rate. Is that considered non-MWE?
To answer the question, technically, the employee is considered as non-MWE because we do have the mandated rate per region. So with regards to
This is minimum wage.
if in the event that the employee from the province receives the rate from Metro Manila, then they are not considered as MWE of that particular region because they receive a higher salary than the mandated for that particular region.
I hope this satisfies the question that was raised about the employee from the province with Manila rate. Thank you, Sir JM, for the answer. Once again, to all our participants, if you'd like to raise questions, open a browser, either on your mobile phone, mobile device, desktop, laptop, tablet, and point to slido.com, type the code 9314146 and click the blue arrow to join the Q&A box. You can just type in your question and then click on send. Alternatively, you can scan the QR code flashed on your screens to get directed to the Q&A box. We have another question on queue. It keeps on popping up. Let's have this question for 1% PHIC differential. How can we get the summary?
With regard to this question, we have a specific portion to answer this particular question that will be tackled on the latter part of the discussion.
Thanks, Sir JM. Yes, it's going to be tackled on topic 5, PHIC 1% differential on myHR. So I'm going to close out this question, but definitely it's going to be answered in topic 5. So later on, just hang in there and we'll talk about that in a bit. So if you have any questions, the floor is still open. You can just click on slido.com in your browser, point that browser to slido.com, key in the code 9314146, type in the question and click on send. It's going to be flashed right away on our screens. And you can also scan the QR code. It's going to be faster for you to get directed to our Q&A box. if you do that. So if you have any questions, please raise them now while we have the speakers on this webinar. Definitely Miss Mary and Sir JM and Jerry is in the room. They may provide feedback right away and of course share their knowledge and expertise on doing the year-end tax activities. Let's give our participants another minute. Probably they're still looking, getting a browser open and typing in the code or typing the question, their questions. So once again, you can open a browser on any of your devices, mobile, tablet, laptop, or computers, and point it to slido.com. Type in the code. It's going to ask you for the code. It's 9314146, and click the blue arrow to be directed to our Q&A box. All you need to do is type in the question and click on send. And we have another question here on queue. If the pay date is November 30 and PAN update previous employer was encoded on the PAN cutoff for that period, will the tax for November 30 be adjusted with combined employer? I hope our speakers got that clearly. So if the pay date is November 30 and PAN update previous employer was encoded on the PAN cutoff for that period, will the tax for November 30, this November 30, be adjusted with combined employee?
Thank you for the question. With regarding this particular question, so we in the if the pay date is November 30th and 30th and the PAN update previous employer was encoded on the PAN cutoff for that period, will the tax for November 30 be adjusted with combined employer It depends. On the specified on the screen earlier, if our tax computation is annualized, the system will combine the income from the previous employer and the current employer. In the event that the tax computation is as per pay or month to date, the system will only accommodate or will only add the previous employer on the last pay date of the year, which if in the event that the last pay date of the year for as per pay and month to date will be annualized. May we know the tax computation for this particular ingredient?
Sir Jim, that's going to go through our help desk.
Okay, sorry.
Yeah. So in case there's like clarification on computation, please attach your manually computed data or information, and then send that to us so that we can do a comparison. So that's you can have that sent to our help desk so we can compare data and provide you, of course, feedback and what else needs to be done if there is any correction or update that needs to be done. So I hope that that the requester, the person who asked this question, got a bit of clarity on that. Thank you, Sir JM, for the answer. Now, if you have any, let me close out the question. If you have any other questions, the floor is still open. I'm still going to give it another minute for our participants to raise their questions before we go on a 5-minute break after this Q&A session. So to raise questions, all you need to do is point your browser to slido.com, key in that code 9314146 and click the blue arrow to join the Q&A box. So you just need to type in your question and click on send. It's going to be flashed right away on screen. So a minute to win it. Alternatively, you can scan the QR code flashed on your screen. It's going to direct you straight to our Q&A box on slido.com. I think that there is no more question that's going to be popping up within this minute. So I'm going to close this Q&A session, but we still have one more Q&A session later on. We're going to go on a 5-minute break. It's 11:09 in the morning. Happy Tuesday to everyone. We're going to have a 5-minute break. Let's return to this webinar at 11:14. All good. Thank you, dear speakers. We'll come back. We'll come back at 11:40. You can take a short water break for that. Thanks. Stay tuned. And we're back. 11:14 it is. Let me check with our speakers if they are already back at their desks. Sir JM and Miss Mary, are you still connected? Are you still here? Are you already here? There. Yes. Thank you. Thank you, Sir JM. How about Miss Mary? Is Miss Mary still here? Miss Mary, are you still connected to the Zoom room?
Hi, hello. Yes, Miss Jubel, sorry.
Yes.
Okay.
Hi. Yeah. Thank you, Miss Mary, for coming back. All right. And thank you to all our participants for staying here, for staying with us this morning. For our next topic, this one is all about the BIR Form 2316 and the Alpha List. And this is going to be discussed by Miss Mary Adlawan, along with the PHIC 1% differential. So she's going to tackle two topics after I hand the call over to her. So Miss Mary, you may proceed. Please take the mic.
So our next topic is about BIR Form 2316 and Alpha List. Okay, so for this topic, so we have here the sample of the BIR Form 2316. This is the we are using here for the old version, but we have a new version for this. So we have here for box 1 for the year. This is same as what presented by GM earlier for the previous 2316 from first employer, say, for the year. Say, so this is the whole. So box 1, what reflected here is the year. And then the box 2, from the periods, so start employment date from previous employer, let's say January 1, then for the end date, let's say until when, let's say March 31. So, okay. Then for the box 4, it contains an employee name. Then the box 12, the TIN or tax number of the employer. Box 13 for the employer name. Then box 25A for previous YTD tax withheld, meaning yung kung may tax withheld, if an employee has tax withheld from previous employer. Okay. Then for the box 27, for the latest BIR 2316, this box is box 29. It is the previous employer income, whether MWE or non-MWE, as long that it will not exceed in 250K. Okay. So the same here for MWE. The income for the basic income for the MWE net of statutory will reflect in this box. Box 27 or box 29 for the latest. And then for the box 28, the holiday pay for minimum wage earner. Then box 29, overtime pay, minimum wage earner. Then box 30, night shift differential for minimum wage earner only. Box 31, the same, hazard pay for minimum wage earner. Box 31 is the 13th month pay and other bonuses or other incentives, both minimum and non-minimum. It will reflect here. Then next box is the de minimis benefits, both MWE and non-MWE. The next box is the tax deductible that contain SSS, PhilHealth, Pag-ibig, and Union Dues. But take note that the Pag-ibig is only up to 100 per month. The next box is the other income that are not subject to tax in line of PT Inc. Series 4 or BN Inc. 4 in myHR. Next. So representation is box 38. Other benefits that are subject to tax will be under this taxable compensation income, which is well defined in the 2316 form. Then other than that, you may go there in box 42, A and B. Then commission, so we have well defined here, box 43, profit sharing, then other income, taxable 13th month pay under box 46, then hazard pay that the subject tax, then overtime pay, here will be defined in our 2316 form. Then the last one is the total taxable income from the latest employer. So if you notice here, okay, so the taxable income for the 13th month pay exceeding na po yan sa 90K ceiling, it includes other bonuses under pay code series 3. Excuse me. Sorry for the interruption. Okay, next. Okay, next slide. For the box, okay. So how to generate the alpha list report and the BIR 2316 report from myHR. So you may log into myHR, then go to the myHR dashboard, go to process, then go to request report tab, then select to report alpha list version here. Alpha list of employees from home taxes withheld exempt version 7.2020. This is the latest alpha list report from the BIR. Then year 2020, then the current employees here. You must take this one. Then year 2020. Then click the button request. Then wait. Okay, then wait until to finish the requested report. Okay, next. So once the requested report is done, next slide, please. Okay. So we have to download. So we have a sample summary income here. Let's say from sample 1, an employee here is non-MWE, where income from the previous employer is below 250K. The bonuses and other 13th month pay also below 90K. So let's say here, the income from previous employer is 150,000. And then the bonuses is from previous employer is 90K. There is 15,000. Then the minimum, the minimis is 5,000. SSS PhilHealth and its DMF is 8,500. So total of 28,500 for the non-taxable income from previous employer. So taxable income is 150. Income from present employer, we have here the gross compensation is 450,000. 13th month pay is 75,000. The de minimis income is 12,000. SSS, PhilHealth, Pag-ibig, and Union Dues is 20,800 for a total of sorry, nagka-interchange, sorry. So a total of 107,000 for the non-taxable from previous employers. So for the sample here, let's say the total compensation income from present employer is 429,200. Add the taxable income from previous employer that 150,000. So gross taxable compensation is income is 579,200 less salary bracket under 400,000. For the first 400,000, we have the 30 tax due as fixed due. Then the existing is subject to 25%. So we are going to compute on this. So 92,000 times 25% resulted for 23,000. Then the act plus the fixed tax due for the first 400,000, which is 30,000, a total of 53,000 as a total tax due for the year. Then tax withheld from January to November is, for example, 43,000. Then the remaining 10,000 is payable for the month of December. So amount of taxes withheld as adjusted is 53,000. So we can find it here. We have an equivalent mapping here from our alpha list and 2316. So gross pay from previous employer, it will be found in box 12A for the alpha list. Then 2316, we don't have mapping for that. Then for the basic pay, net of statutory, in the alpha list, it will be found in box 12G, then 2316, none. For the 13th month pay for the previous employer, it will be found in box 12B for the alpha list, 2316, none. For the de minimis income or allowances, it will be found in box 12C. For the BIR 2316, none. The tax deductible SSS, Pag-ibig, PhilHealth, etc., it will be found in box 12D. 2316, none. Total non-taxable income from previous employer under alpha list, it will be found in box 12F. So a sum of box 12B, 12C, 12D, and 12G. For the 2316, none. Total taxable income from previous employer, it will be found in box 12G in alpha list. And 2316, it will be found in box 22. So if you notice, so only the taxable income will reflect and 2316 for the latest 2316. So all non-taxable income from previous employer will not reflect and the BIR 2316 from the latest employer. Okay, so for the gross compensation income from present and previous employer, it will be reflected in box 7A under alpha list, then in 2316 box 19. For the 13th month pay and other bonuses, since the 13th month pay from the previous employer and current employer is only 90K, so meaning not subject to tax, so it will be reflected in their box 7B and their alpha list. Then in 2316 box 34. For the de minimis income from present employer, box 7C and their alpha list. Then in 2316 box 35. For the SSS, PhilHealth, Pag-ibig, and Union Dues from present employer, it will be reflected under box 7D and alpha list. Then box 36 and 2316. For the basic pay needs of statutory income from present employer, it will be reflected under box 7G in alpha list, then box 39 and 2316. For the total non-taxable income and the latest employer, in alpha list, it will reflect in box 7F. So 7F, it composed 7B plus 7C plus 7D and 7E. So in 2316, it will reflect in box 38 and box 20. Taxable compensation income from present employer and alpha list, it will reflect in box 7G, 7J, then box 21 and 2316. For the taxable compensation income from previous employer, as I said, it will reflect in 12G for the alpha list. Here, 12G. Then box 22 and 2316. So this is the only income that will reflect. This is the only income from previous employer that will reflect in 2316, latest 2316, the taxable income only. Either 250 or below or above 250. So for the gross taxable compensation income for both, so in alpha list, it will reflect in box 13. Then in 2316, box 23. For the tax due, so in alpha list, it will reflect in box 14. Then in 2316, box under box 24. For the tax withheld from present employer or current employer, so in alpha list, it will reflect in box 15B. In 2316, box 25A. So for the tax withheld from previous employer, if there is any, since our example is none, so it will reflect in box 15A and alpha list, then box 25B and 2316. This is 2316. So For the tax payable or refund under alpha list, it will reflect in box 16A, and then 2316, none. Ah, 2316 box 26, sorry. Box 26 for the amount withheld. So added now in the latest 2316 is the box 27 for the 5% PAYRA. As of now, we don't have mapping in alpha list yet. So box 28 and 27 has no mapping in alpha list as of this moment. Okay. So for the next sample, slide number, next sample. Okay. So this is how it looks like in encoding in, as discussed earlier by JM. So for example, this is our screen in myHR. So this one is the sample of the 2316 from previous employer. Mostly from the previous employer, even the income did not reach in 250. The amount will reflect here. The amount reflected in this box number 38, if you notice. So if we encode it in myHR, we have encoded it here under non-taxable income, even if it is taxable here. Because we have logic on this for our reports. If the income from previous employer and present employer will exceed in 250K automatic, this income is subject to tax. Then there also the previous tax type, we need to indicate either NWE or regular tax. What will happen if this will not be filled up? So the income from previous employer will not reflect in the 2316. Why? Because the default setup here is NWE. Okay. So next slide. So we have sample number 2. For the non-MWE, income from previous employer is still below 250K. Then bonuses and other 13th month pay is above 90K. So this is what happened in our 2316 and alpha list. So for the computation of tax, we have here basic salary from previous is 108,000. Then the 13th month pay is 100,000. SSS PhilHealth Pag-ibig is 12,000. The de minimis allowance is 10,000. Total of 112,000 for the non-taxable income added to the basic salary, which is, so a gross income here is 230,000. For the taxable income is 118,000. Okay, so then, for example, that the income from present employer is still 450,000. For the gross income, it composed basic salary to 342,200. 13th month pay 75,000. SSS PhilHealth Pag-ibig 20,800. The minimum income is 12,000. Total non-taxable income is only 32,800. So what is the composition for this 32,800? The is PhilHealth Pag-ibig and the de minimis income. Because 13th month pay here is considered as taxable since the 13th month pay from previous employer already exceed in 90K. So automatic, this 13th month pay is taxable. So Basic pay net of statutory is 321,400. Add bonuses. So taxable income will be 417,200 for the present employer. So add from previous employer. So gross taxable income is 535,200. So still under bracket 400 and above. So for the 400 and above salary bracket, so we have 25% in excess of the salary bracket as our multiplier. So the product of that is 33,800. The first tax due for the first 400,000 is 30,000. So total of 63,800. This tax withheld from January to November, 55,000. So we have tax payable on December, total of 8,800. So amount of tax withheld as adjusted, we have 63,800. So tax due and the amount of taxes withheld as adjusted is the same amount. For the mapping of the alpha list and 2316, for the gross income from previous employer, still, it will be found in box 12 in under alpha list, 2316 none. For the basic income or basic pay net of statutory, box 12 in alpha list, 2316 none. 13th month pay, non-taxable, the 90,000 will be found in box 12B. Excess, the 10K will be found in box 22 on top of that 90K saving. So for the SSS, Pag-ibig, and PhilHealth, still under box 12D, then 2316 none. The minimum income, 12C, 2316 none. For the total of non-taxable under 12F and alpha list, then 2316 none. For the taxable income, basic pay net of statutory, box 12 here. So it will reflect in box 22. And the excess of the 13th month pay, which is 10,000. So box 22. Sato 316. So this income will only reflect these are the incomes that will reflect in box 22 from previous employer. The 90K, the excess of the 90K tax bonus ceiling, which is 10,000, to be added at the basic salary income. For the present compensation income, gross salary is 450. So it will be under box 7A in alpha list, then box 19 and 2316. Okay. For the SSS, PhilHealth, and Pag-ibig, in alpha list, it will be under box 7D, 2316, box 36. The minimum is box 7C, 2316, box 35. Total non-taxable, box 78 in alpha list, 2316, box 38, and box 20. For the basic pay, box 7G in alpha list, then box 39 in 2316. Then for the 13th month pay, since this is already taxable, so it will be fall under box 7H. Then 7H, then box 48 in box and 2316. For the total compensation income from present employer in alpha list, box 7J, then box 21 in 2316. For the taxable income from previous employer, total, so box 12J and alpha list, box 22 into 316. For the gross taxable income, compensation income, and alpha list, box 13, then 2316, box 23. For the total tax due in alpha list, it will reflect in box 14, box 24 into 316. For the tax withheld from January to November, present employer, box 15B, 2316, box 25A. Tax withheld from previous employer if there is, so it will reflect in box 15A, then box 25B into 316. For the tax payable or refund, alpha list, it will reflect in box 16A, then box 2316. For the amount of taxes withheld as adjusted, and alpha list, it will reflect in box 17, and then 2316, box 26. If an employee has a PERA, which is 5% tax credit or benefits, it will reflect in box 27 in 2316. As of now, no mapping in alpha list. Okay. So, next, for sample number 3, so this is how it looks like when we encode the previous income from previous employer. Since, say, for example here, let's say that the previous employer correctly mapped the income into 316. So since below 250K, so not subject to tax, so it will found in box 29 for the latest 2316. So box 29 is 108,000. So still in myHR, you need to encode it under non-taxable in SMW, non-taxable for the regular tax. Then for the 13th month pay in box 34, the 90K, so you have to encode here under non-taxable bonuses. For the excess 10,000 in box 48, so it will be encoded here under taxable, 13th month pay taxable. So, yeah. For the de minimis, still here, under de minimis, non-taxable. This is applicable for minimum and non-minimum. Then, for other tax deductibles such as SSS, Pag-ibig, PhilHealth, contribution, it will be here. Previous employer, specified. So, okay. So, that's it, how it looks like in myHR. Okay, so next. Okay. For sample number 3, we have an MWE employee here. Let's say the gross income from previous employer is 230,000. Basic pay net of statutory is 108,000. 13th month pay is 100,000. SSS, PhilHealth, Pag-ibig, and Union is 10,000. Total non-taxable income is 12. So total non-taxable income here is 220,000. Total taxable income is 10,000. And so 10,000. Why? Because all income here is not subject to tax from basic salary, overtime, and other. So the only taxable income here is the income in excess of the 90K ceiling for the bonuses. Granted that this employee is still minimum wage earner to the new employer. So it say here, total gross income is 182,000. Basic pay is 150, net of statutory. 13th month pay is 13,000. The minimum income is 12,000. Then SSS, Pag-ibig, and PhilHealth is 20,800. Total non-taxable income is still 182,800,000. So non-taxable because she is a minimum wage earner. So still, the only taxable income that reflect in the 2316 is the 10,000. Though there is no tax due because this is still below in 250 tax ceiling. Next. So for the mapping of the alpha list and 2316, so under schedule 2 for the MWE. So the gross income from previous employer is under box 12A. 13th month pay, the basic pay, net of statutory is box 12B. 13th month pay non-taxable, the 90,000 reflect in box 12J. Then the excess is under box 12L and 12 in. Then in 2316 box 22. The de minimis is still in box 12H. Then the ECCS box 12I. Then total non-taxable is 12K. For the present employer, gross income box 7A. Then 2316 box 19. For the basic pay, net of statutory, alpha list 7F, 2316 box 29. For the 13th month pay, box 7K in alpha list, 2316 box 34. The de minimis income, alpha list 7L, 2316 box 35. SSS, Pag-ibig, and PhilHealth deductions in alpha list 7M, box 7M. Then 2316 box 36. Total non-taxable income and alpha list box 70. In 2316 box 38 and box 20. For the net basic pay non-taxable and alpha list box 7R. 2316 box 21. Then the total compensation income from previous and recent employer and alpha list box 12N in 2316 box 22. The gross taxable compensation income, which is 10,000 from previous employer, it will be found in box 13 in alpha list. Then in 2316 box 23. So that's it. So there will be no tax due because it is below 250K. So this is how it looks like. And encoding and myHR. So since the employer here is minimum wage earner, so the regular tax. So the income will be here under basic PMWE. So since she don't have holiday overtime, so all the rest is blank. Then non-taxable 13th month pay still here, the 90K, then the excess will be encoded under taxable 13th month pay. The 10,000 here is taxable. Then the de minimis income still here, and the SSS. So yeah. Okay, so that's it. So this is how it looks like, our doc file of the alpha list. For schedule 1, D1 here, D1. So what you found here in D1 is the list of employees. So if you notice, it contains 16 of received form BIR, then the income tax, the TIN number of the employer to TIN number of the employer, then the name of the employee, legal name 1000, for example, then the region in CR. Ayan. So from, let's say, from March 5 until December 31, 2021, this is the period of employment here. And then the amount. So if ever what's the income from present employer and previous employer will reflect here. And then the last one is this is the status of the employee, P for probationary, R for regular. And then this C1, it does not contain the total of one employee only, but this contains for all the total of all employee under D1. Unlike before, the total is per employee. So under the new alpha list, C1 contains all the total of the D1 employees. Total income, taxable income, non-taxable, tax withheld. So this is the content under C1. For the minimum, D2. These are the minimum employees under D2. So they are still the same here. D1, D2 is the summary of all the employees under minimum wage earner. And then the C2 contains the total incomes under D2 employees. So all gross income, basic, 13th month pay, so it will be found in C2. So this is the dot file of the alpha list report. Okay. For the PDF file, this is how it looks like. First, it contains the header, the company name, and then the name of the report, and for year, what is the taxable year covered. So under box for the first seat, so present employer. So all incomes from present employer will reflect under schedule 1.1. Then for the schedule 1.2, it contains the income from previous employer. Fine. Let's say here. Yeah, no, in the middle. Nagka-interchange. Okay. So from previous employer, sorry na, nagka-interchange. So, ayan. So supposedly this one is the second part in the middle. And then the last one is the 1.3, the combined income from previous and present employer. So only the taxable income will reflect in this part. Non-taxable income will not reflect here. Okay. So tax due if an employee has previous employer and then she have or he have previous tax withheld. So tax due here and the amount of tax withheld will not equal. The amount that will reflect in the amount of tax withheld is the amount that withheld only from the latest employer. So if you notice here, there is a formula found in that report. So only the tax withheld from latest employer will reflect in this box in the amount of tax withheld. So unlike before, that the tax due is equal to this amount of tax withheld as adjusted. So for the new design of the alpha list from the BIR, so it's different. So the tax due here will not equal to the tax due if an employee has tax withheld from previous employer, but an employee doesn't have tax withheld from previous employer. So the total tax due here and the amount of tax withheld as adjusted still the same. They are the same amount. Okay. Next slide, please. For the alpha list under minimum wage earner, so schedule 2 po sila. So they have added boxes here that contain the minimum wage per day based on what region the employee assigned. Let's say assigned in NCR, so the daily minimum wage that will reflect under box and under this box, so 570. So and then for other regions, so you have to expect that different amount will reflect if an employee has signed or this employer has different employee from different region or so that one. So the same as in schedule 1. So what added here is the information of the daily minimum wage earner, the year equivalent income for the minimum wage earner. So that's added here, and the alpha list report. Okay. So that's okay. So that's all about for the report of alpha list and 2316. Now we go to 1% fit size differential. Okay. So under PhilHealth Advisory number 2022-0010 or 10, it stated that effective January 1 of year 2022, the contribution will be 4%, both employer and employee share total. Sorry. So it means the 2% from the employee and 2% from the employer, a total of 4%. But the income below 10,000 or 10,000 and below, we have a fixed contribution of 4%. 100 pesos total. Employee is 200, employer is 200. Total of 400 pesos. That is the minimum PhilHealth contribution. From January to May, the PhilHealth has not yet implemented the 4% contribution. They retained that 3% from previous year. So that's why we have a 1% differential here from January to May, because PhilHealth started implementing the 4% last June only. So effective June, our PhilHealth contribution is already 4%. So from January to May, 3% pa lang. So hindi pa nag-e-effect doon yung 4%. So nag-e-effect lang siya ng June. Pero based sa pinalabas nila na advisory, sa the effectivity is from January 1 to May. That's why merong 1% differential. So we have 1% differential in contribution. myHR have used the PTD 200064 for the employee share, and then ER did 00002 and so on for the employer share. Okay. So how it looks like and the payslip. So the 1% EE share will reflect in under other deductions. The ER share will no longer reflect in the payslip, but it will reflect in the pay rates report, payroll register report. Okay. So here, this is the payroll register report. It contains the name, then the pay code label. So it will reflect here the both ER share and EE share for the 1% differential. Okay. In relations to the question on how earlier on how they will get the 1% differential. So the PHIC will issue an SOA, statement of account for the differential. You can download it under APRS. So the amount that will reflect under the SOA that you downloaded from the APRS of the PhilHealth will be the amount to be deducted to the employee. Yeah, Mr. John. Mr. John Manansala is raising his hand. Yes, sir. Okay. You have questions, sir? If none, so I will continue. So yes. So the 1% differential came from the SOE of that was issued by the PHIC and will be downloaded under APRS. So for the resigned employee, before niyo po i-download yung report, you need to edit the amount. You retain only the employer amount share, employer share. Employee share will be deleted. You need to retain the employer share. So whatever the amount that will reflect from the edited SOA, granted that your employee has evidence that the employee is no longer connected with the employer from January or from what month. So yeah, only the employer share will be paid by the employer. Okay. Okay, for next slide, please.
For the next part of our webinar, we are going to open the Q&A session so that our participants can ask questions about the last two topics that have been discussed by Ms. Mary Adlawan. So we have questions on the queue. They were submitted a while ago while Miss Mary was discussing on the alpha list. We have here the first question on queue. Out of curiosity, since our taxes have always been annualized, what are the pros and cons between a monthly tax and annualized tax?
Since our tax have always been annualized, what's the pros and cons between a monthly tax? None. What's better is the annualized.
So, well, thank you, Miss Mary, for the answer. Sir JM, would you have anything to add to the question or to Miss Mary's answer?
With regard to the question of out of curiosity, since our tax have always been annualized, what's the pros and cons between a monthly tax and annualized tax? We strongly recommend that the tax computation will always be annualized tax. The pros and cons, there's a consequence using monthly tax wherein the taxation computation will always be based on the month only. There's no adjustment from previous month to current month, unlike if we are using the annualized tax computation. So if ever, for example, January that the income is higher, then in February the income is lower, the system will not include those particular months because the income for those particular months is different. Unlike if we are using the annualized tax computation, wherein the previous months will always be included in computation of the tax of the employees.
Thank you, Sir JM, for the additional insight answering the question from Ms. Abby Madura. The next question on queue is, does the PAN approval have a cutoff date? If we upload the previous employer of newly hired and approve like a month after we encode, will it be adjusted?
Just have to clarify the specific inquiry wherein the stated there is if we upload the previous employer of newly hired and then approve like a month after we include. In the event, of course, the system will take effect the update encoded for the employee based on the approval date of the transactions. Again, we'll go back to the tax computation of the tax computation set up in myHR. In the event that the tax computation is annualized, of course, the next applicable pay date will take effect the approved transaction for the employee. In the event that tax computation is as per pay, of course, we'll have to still wait for the last payroll of the year before the transactions will be add up to the current the previous employer records plus the current employer will be add up.
Thank you, Sir JM, for the answer. Miss Mary, do you have anything to add
Uh,
to that?
yes, I have an added. For those who are erroneously encoded, we found some erroneous encoded information from previous employer. Let's say, as we have to re-encode for the active, as long that the employee still have a payroll process within a year, it will be still be corrected. For example, yung non-taxable na below 250 ay na-encode under taxable. So we have to re-encode it. Then adjust 1 day for the PAN. Let's say before yung unang na-encode nyo, effective date is July 1. Then for the re-encoded, we have to adjust 1 day. So we make it July 2. So it will take effect. So the tax still adjusted into the right. At the same time, the report, we generate the right report for the previous employer income. And then some also don't have tax type. Make sure that the encoded information from previous employer has tax type, because the effect, if it doesn't have tax type, the previous employer income will not reflect in the report. So we found some na wala pong tax type. So kindly review for those who attended here, kindly review for your employer that have previous employer if you encoded it correctly. So we have time to correct pa because we still have 3 payrolls, 3 remaining payrolls for the year. Okay, that's it.
Thank you, Miss Mary. Great piece of advice to our payroll processors and to all our PAN encoders. So definitely we have to ensure the accuracy of information that we're encoding on the system. Let me close out that question. I hope it's clear to our participants, our speakers' answers. Next question that we have here, mag-issue po ba kayo ng e-certificate for this webinar? And yes, that will be included in our post-webinar kit. It will be sent individually to our registered participants. So if you had signed up or if you had registered for this event, definitely you'll be receiving an email containing our post-webinar kit and all the recording links of our webinar. So I hope that's clear to everyone. It's going to be sent after this webinar. So we're just going to prepare that and send it out to everyone. We have here the question, did we to upload reflect the PHIC 1% ER share on the myHR payroll? Did we I'm presuming that the participant was asking, did we upload or have the PHIC 1% ER share reflected on the myHR payroll? Or are we going to upload? Or like how are we going to have the PHIC employer share reflected on the myHR system? I think that's what our participant was asking about.
Yes, both E and ER shares are going to upload.
Yes. And as shown a while ago, the ER share is going to be reflected on the payroll register, as Miss Mary had shown earlier. But I think Miss Mary, for this question on the PHIC 1% ER share, is it also going to be reflected on the payslip?
Only the AA share will reflect in the payslip. AR share will no longer reflect in the payslip. The purpose here is like, for example, for you, is it to make a payroll entry? At least the details already found in the pay rates.
Thank you, Miss Mary, for the answer. Let me close out that question and we'll proceed to the next. For 2316, we have two systems. Database is employer name. What do you mean? 1 and 2. And then is it okay that the 2316 report reflected is database 2 supposed to be none? I'm not entirely sure if we got that. Maybe we can clarify that, Miss Mary. Or if you got anything from that question about 2316 because they have two systems. If it's not so clear, maybe we can ask our participant who have posted this question, if you can rather clarify your question, just send in the question and then we'll get back to you. Definitely we'll answer the question. I actually were you able to get anything out of that question, Miss Mary? On 2316.
I don't know what system that they mentioned here.
Mhm.
I don't know. I didn't get that.
Yeah, or probably probably it's about the schedules, schedule 1 and 2. So I'm not sure. We're not sure. Okay. Let's move forward. Let's move forward to the next question. If the company is based on per table tax rate on a monthly basis, does myHR automatically annualize it at the end of the year, December 31 payroll?
Yes.
It's a yes. It's a straight yes from Miss Mary.
Any tax is like as per pay or monthly pay, it will annualize at the end of the year. Tax competition will be annualized at the last payroll of the year.
So that was clear as day. Miss Mary's answer, it's a yes. It's a yes for this question. Our last question on the queue is, did we need to upload or reflect the PHIC 1% ER share on the myHR payroll? Or do we need to have that reflected on the myHR? This was the corrected question about
Yes, the same question that I have answered. Yes, we need to upload the PHIC 1% ER share. This is for GLA purposes. At least the accounting will not hard getting the entry. All information already reflected in the pay rates.
Thank you, Miss Mary. I hope that the answer is suffice enough to close out this question of the need to upload or reflect the PHIC 1% ER share on the myHR payroll. There's another question. It's asking, we had recently released employees 13th month pay, and there were employees asking why there is tax, why they were taxed. We said that they reached the 90K de minimis threshold. So I think there should be like more context to this. Or are you able to take the question, Miss Mary?
For the 13th month pay that has already taxed, I think that employee has hindi lang 13th month pay. So that employee has other bonuses or other incentives under under pay code PT Inc. Series 3 or BN Inc. Series 3, aside from the 13th month. That is why the 13th month pay is already subject to tax, because that employee already reached the tax ceiling of 90K. As we said, 90K does not only include 13th month pay. It also includes other bonuses under Series PT Inc. 3 and BN Inc. 3 and myHR pay code.
Thank you for the answer, Miss Mary. That was clearly stated. And if you have, to all our participants, if you are having challenges in understanding why there was a discrepancy or anything of the sort, you may send a ticket to our helpdesk at titanium.ph, containing your manual computation if you do have those, and we'll be more than happy to assist you with your concern. And there was a feedback. We do apologize for the limited character count on our on our Q&A box. We'll definitely improve on our Q&A box the next time around. So I'm going to add that as feedback for our webinars. Thank you so much for that feedback. We have here another question. Can we set up for buffer for tax for those with bigger income so not to have tax during 13th month? Ms. Mary or Sir JM, your thoughts, please.
Buffer. Anyone?
Hi everyone. When it comes to questions like this, I volunteer and present myself because these creative approaches to tax calculation is tied directly to how I design the system. No? Can we set up a buffer for tax for those with bigger income, so not to have tax during 13-month pay? This is also kind of tied to the question of Abby earlier about the salient differences between annualized payroll and monthly tax payroll. I have to say that there are many creative ways to calculate taxes in order to cushion either the 13-month or the year end when it's December, so that we have more money for shopping. The challenge with the design is that one cannot really create one formula for all levels of income, unfortunately. No, the variableness of the different incomes for different pay grades, from the lowest rank and file to the highest executive officer, for example, versus the differences in release dates of bonuses. No, some companies may release bonuses early in the year, some in mid-year, some in end of the year. This variableness is what affects us or impacts us when we design a creative formula. Okay, so I become very cautious when I try to design something for a particular client. All right. Now, having said that background, in response to this question, the way around this really is to, if you want, to not tax the 13-month. We have such a feature. We don't have to buffer in order to not tax the 13-month. The myHR system is designed such that each pay code is individually taggable, whether it's taxable or not, and whether you want to apply tax or not. So if we separate 13-month pay calculations, for example, I believe we have 1 or 2 customers who request that their 13-month pay is not taxed, and instead spread the tax towards the other regular payroll. No? So that's possible. Can we set up a buffer for tax? Possible then. We can, for example, say whatever the tax calculation is, just add 1 more percent. The problem there lang with that approach is that sometimes there's 1 or 2 employees that has PhD in mathematics and tax calculation will suddenly challenge a calculation and say, why is my tax deduction like this when the table is only like this? And then we go through a very long convoluted argument of this and that, no? But in answer, yes, there are creative ways to do that so that our 13-month pay is solid. And also possibly that our December tax are lower by spreading the risk from January to November. However, if I do this, I'd rather do it for all customers rather than just for one customer. Simply because from a support perspective, it's hard to for one support team member to remember that customer A has this creative setup, customer B has this other setup, customer C, and then every time when a customer come to challenge a tax calculation, we're at a loss trying to figure out, o nga ba, what did we do na nga ba? But in answer to that, yes, there are many creative ways to help our employees cushion tax impact towards the end of the year, especially 13 months. If you want to go into a deeper conversation about this, we can set a call, a group call if you wish, if anyone wants to do this, and then we'll come up with a way. But I do remember there's a way to disable 13-month tax calculation, I think. But of course, we have to be careful there. The 13-month of minimum wage earner versus the 13-month pay of your vice president position or executive, for example, is so big, the disparity is so big that the buffer throughout the year might also be so much bigger, trying to absorb the tax for just the 13-month. No? And issues arise, for example, if you hire a new executive with a very high salary, but he joins in, let's say, September. No, so no amount of buffering in September, October, November might be enough to cover that. So maraming mga issues, but willing to discuss with everyone. Next, we're done on the PhilHealth 1% differential EE share and reflect on our November payroll. But unfortunately, we're not able to upload the ER share. I think uploading the ER share has no impact as far as 2316 and Alpha List annualization is concerned. We can eventually upload the ER share if only for reporting purposes. But ang primary goal natin for the 1% differential is to ensure that there is a correct tax calculation or tax deduction and tax deductibility for our employees. That's our first and foremost consideration. For employers, it's basically just for reporting, diba? And then for proper expensing and booking in your financial in our finance system. So that means it can come later. So it's okay. It's not that unfortunate yet. Pwede pa namang habulin. I think we have time. Last question. Is it okay if we reflect the ER share in our December payroll since we're done on our November payroll? I'm not sure what the PhilHealth's rule is, but I suppose it's okay as long as they get their money, they're happy. Yeah. But I don't know if there's a penalty consideration. But I think that in all things in the Philippines, everything is negotiable, especially when the government is late in whatever announcements or new regulations that they want us to do. I think it should be okay, but I am in no position to say this, but I'm just guessing. I assume it's okay as long as it's remitted and then ano na lang, negotiations na lang konti. But we'll find out for sure what is the requirement, and then as part of our post-webinar notes, we'll send you verbatim a copy of whoever from PhilHealth responds to this question. But by no means it is official, but I think it should serve as a good rule of thumb. All right, any more questions for us today?
Yes, if you'd like to raise your questions, you can just open a browser, go to slido.com, point your browser to that site, key in or type in the code 9314146 and click the blue arrow to join the Q&A session.
It's 12:30. Are we serving lunch, Chobel? Oh, we're not
I
face to
wish
face.
we
Okay,
are.
sorry.
We're
When
not.
next
Yeah,
we
we're
have face-to-face,
online.
I'll buy everyone lunch. Face to face.
Thank you for staying with us this afternoon. Thanks, Jerry, for your answers. I'm going to close out the last question, that last bit of question on the PHICER share. But to all our dear participants, if you still have any questions, please raise them on slido.com. The code is 9314146. type in your question, click on send, and it will appear on our screens. Virtual lunch. Yes, everyone's doing, working lunch, virtual lunch these days. Love that. So we have a minute left on my clock before we go to the last activity. This is just like a pulse check with all our participants here that's still connected to our webinar. So if you can send those questions, we have a minute left for our Q&A. This is going to be our last Q&A session for this webinar. So if you have any more questions, please do submit them. Slido.com, and you have the code on screen. We also have the QR code for faster access. So I don't think there's any more question. Now, if you are still on slido.com, but you don't have any questions, let's answer this self-rating. As you may remember at the start of our webinar, I've asked you this question now. This point, how would you rate your readiness in independently doing your year-end tax activities? So if you had scored yourself or rated yourself with a 2 a while ago, or probably a 3, so did it improve? Did this webinar provide you information, insight on how to go about your year-end tax activities? Rate yourself. 1 being, I'm not ready at all. I'm still not ready. And 5, I'm so prepared to do it. I'm prepared and ready. We're pushing everyone to, of course, be ready with this, with your year-end tax activities. Everyone aims to have 0 error, error-free year-end tax activities. The general population has rated themselves with a 3. So that's an improvement. A while ago, there were people rating themselves with a 2. But now the general population has a rating of 3.6. That's an increase. Congratulations. The initial score was 2.4, and now we're seeing people 3.6. Everyone here in the office is clapping their hands. That's a great improvement. People are also rating themselves with a 5. Congratulations and thank you. So happy. Yes. Yes, Jerry. Yes.
As a leader of our organization and as a chief designer of the software, I'm a bit concerned that our users, our customers are rating themselves a 3. Okay. Everyone, this is my opinion. If we encode all the new hire information, and if we encode or tag all the pay codes correctly, there is really nothing for you, our users, to independently, quote unquote, doing your year-end tax activities. Because our software, my software, the Titanium myHR software, is supposed to do all that for you. As long as all the encoded data is correct and encoded in a timely manner, the software will do its job for you. You don't have to do anything. Work only starts when there is a discrepancy between the monthly tax withheld total versus what you actually remitted to the BIR. All right. But for as long as what you remitted to the BIR is based on the monthly tax report from our system, then there's no discrepancy and there's no tax activity to do. The way we designed our software is specifically to eliminate the need to do any year-end taxes. because we're not doing anything now. It's fully automated. I got you guys covered, no? And hence the reason for this seminar is to dispel any notion that there is really any work needed, but for as long as the standard process we publish or we announce is followed. So what we really need to watch out lang, or for you to identify after this webinar, is that was there any deviation from the process? And if there is, how do we fix it? Now, if we're able to fix it this November, and then we allow our December payroll to do its work, then there's really no year-end tax activity. All right. So whether you rate yourself a 1, 2, a 3, a 4, or 5 does not matter, because the software rates itself at 10. It can do its job very well for you. And that's what you guys are paying me to do. All right. So I think that's what we must do. We must find out if there's any deviation. If there's no deviation, I think that you channel your effort, fears, and time somewhere else. No, not tax. Tax, I got it covered. All right. But in any case, there might be deviations, so you could identify those deviations sooner or soonest by this week. Sana, Thursday deadline, please submit those deviations for us so that we can recommend your course of action. Okay. And to that end, I think we're offering a service. We can take on this recon job for you. Kaya kahit na 3 ho kayo o 4 or 5, pwede pong kami na lang po ang gagawa if you wish. No? But other than that, if you are sufficiently confident with the content of this webinar, and then you are able to quickly identify the discrepancy from the monthly report versus your remittance, we can easily point out where the discrepancy is and then what the correct action is. So it should be that simple. Kasi the software, we still have December 15 and 31 payroll to reannualize and to correct whatever tax differences that may have been accrued between January and November. So ideally, we let the software do its job in December para wala na po tayong gagawin in January, para hindi po sayang yung bakasyon natin ng December. Pagpasok ng January, we're stressed again, ngarag again. So let's avoid that. Let's identify and fix it now, this November, this week and next week, if possible. Thank you.
Yes, in connection to what Jerry had mentioned, if you're still having challenges and trouble in tax reconciliation, let us know if you'd like to get engaged, if you'd like to engage with us on this particular activity, and we'd be more than happy to help you out. You can contact our help desk. That's helpdesk@titanium.ph for a quotation on our service package. So we have a starting service package price of 20,000. So, but definitely there's a scope. There's a scope of work that is included in the service package. Tax reconciliation, monthly tax withheld versus monthly remittances, so on and so forth. A lot of those things. So we have that in the service package. All you need to do is ask our help desk team for that quotation. We are in going into the very last part and ending part of our webinar today. We thank you so much for your participation today. If you can quickly provide us feedback, I'm going to send the survey link in the chat box for everyone to take a moment to answer our 3-minute survey about today's webinar. How did we get to help you through this webinar, and how did you feel? How do you think about our webinar? How did it go for you? Once again, thank you so much for attending today's webinar, and we very much appreciate your attendance. Please watch out for your post-webinar kit. It's going to be emailed to you to the email addresses that you have registered with, and it's going to contain the recording link, supplementary materials, and then all the wonderful, if we have any templates, all of those templates that we're going to send you, it's going to be included in the post-webinar kit. So watch out for that. Email is going to be sent to you after the webinar. after today, within the next 24 to 48 hours, it's going to be with you, so you can review and do a recap on your own, with whatever knowledge and expertise that has been shared on today's webinar. Thank you all for your participation this afternoon. Thank you for staying with us 44 minutes over time. But it's all worth it. Definitely, it's all worth it. Thank you so much. Power up, and Titanium Technologies appreciates you. Thank you and have a great day. Thank you all for joining. You may now disconnect. Bye.